Welcome, everyone. Welcome to another live stream. It's your host, Danny Dhaiphong. We have a great show for you today. So please hit that like button because that helps boost the stream in YouTube's algorithm. I will always give up tariff points if I can get major countries to open their markets to the USA. Another great power of tariffs. Without them, it would be impossible to get countries to open up. Always zero tariffs to America. These are the words of Donald Trump, currently riding a high of striking several so called trade deals with Japan, the Philippines, among other countries, as his self imposed 90-day deadline for tariffs pause comes to a close. But what lies underneath the surface of the celebration is serious: a declining dollar, a crumbling economic foundation, and an empire hell bent on using dominance and coercion to stop a rising multipolar world. What is the current state of the economic order following the BRICS summit? What are the true repercussions of a never ending trade war on the US dollar's dominance? To discuss all of this and more, I have two very special guests I am happy to bring together for the first time. It is Professor Richard Wolff, Professor and Economist Richard Wolff, and Sean Foo, who runs his own YouTube channel, Sean Foo, and is a market analyst. Gentlemen, thank you so much for joining me today.
Glad to be here.
Happy to be here, Danny.
Great. So I wanted to first talk about a story I have not yet covered, which is amid all of this trade war hysterics coming mainly from the Trump administration, the Financial Times shared what should be alarming both to the Trump administration and for perhaps the U.S. economic elite as a whole, where China's treasury holdings of U.S. treasury bonds has been sinking for quite some time. And in 2010, China was the undisputed number one holder of U.S. treasuries. Now its holdings of U.S. treasuries is below that of the United Kingdom. And of course, this comes amid, Professor Wolff, if you want to begin, this never-ending trade war, which of course is now in high gear as the Trump administration, unsurprisingly, is focusing mainly on countries in Asia and China's periphery. So, Professor Wolff, what is your reaction to this development and its overall impact on the U.S. economic situation and position in the world?
Well, my reaction is quite similar to that of most of the things that Mr. Trump's government is now doing. I see it as primarily designed for the political success he hopes it will have domestically here in the United States. His position as president is shakier now than it has been since he took the oath of office half a year ago. His polling numbers reflect that. The desperation with which he is casting about for almost anything that can distract the public from the issues that are driving down his popularity. And those issues are inflation, which, while it is still not serious, is ongoing and looking like it will speed up in the second half of the year, which is very, very bad news for him. The fact that he didn't bring, as he had promised, the war in Ukraine to an end, and on the contrary, it seems to be getting worse, that he's initiated a whole new war in Iran, that he has done nothing to stop the horrors of Gaza and the Middle East. And now he's caught up in a scandal in which the promised transparency of his government is clearly upended by the fact that they're trying to hide everything having to do with the pedophile financier, Jeffrey Epstein. So he is in very bad trouble, and he is casting about for almost anything that can look at least a little positive or at least a little moving in the direction he had promised. To give you one final example, over the last 2 days, he has effectively and literally accused President Obama of treason, which is a crime punishable by death in the United States. It is very extraordinary, to say the least, for a president. I'm not sure it's ever happened in American history for a president to suggest, let alone to declare, a prior president, especially one still living, to have committed a treasonous crime. You only would do that if you're desperate to distract. So the deal with Japan, announced a few hours ago, which looks good, is another effort to suggest, well, I'm at least succeeding somewhere over here in getting countries to submit to tariffs that are higher than what they used to have, higher than what people thought they ever would agree to. And here it is, I can claim that I agreed to it. I think that's the way to understand this. I'm not clear why the Japanese went along with it, except, of course, their government has its own crisis to deal with now. And a final point, it is not uncommon in international dealings for there to be not only the signing of official documents, but also the signing of secret documents that are not made public for a long time. I think it would be wise for everyone to keep in reserve at least the question, were other things done or given to Japan in this case to help it make a decision to sign the official agreement to a tariff as high as they agreed to?
Yeah, Sean, could you talk about the significance of what it means for China to be letting go of U.S. treasuries at the rate that it has over this last several years, and especially in the last couple of years and under the Trump administration? What does it mean, and why is it significant?
Sure. I think China now is under no illusions that the Trump regime, even the Biden administration, and the entire US as a whole is out to get them. You know, China used to work on the old order of vendor financing, right? They would sell a lot of stuff to the US. The US would then send them dollars, and then the dollars will get recycled back into US Treasury bonds. And that is how the old world order used to be. So there are two things that Trump is actually doing that is breaking this entire recycling scheme on. Now, the first thing, when Trump decides to impose a 30% tariff on China on top of whatever existing tariffs there are, and in some products, we are looking at 70, 80, or even 100%. So suddenly China they are going to lose a lot of revenue over the next year, 5 years, 10 years. So a lot of money earnings from the US is going to drop. Now, if we look at the trade, the exports of China all the way to the US, it has dropped anywhere from 20 to 30% in aggregate and 40% in some categories. So now China is earning less dollars. So as a consequence, right now they have less money to invest back into US Treasury bonds. And what's really the point of holding US debt? Now, firstly, as we all know, the dollar has been dropping. It has lost around 8 to 10% of its value. So just on an economic, fiscal standpoint, it's not a good investment, right? Who knows how much more it will drop over the next 3 to 5 years. And secondly, China has seen what has happened to the enemies of the US, more specifically, what has happened to the Russian reserves. Now, this is something that we cannot take lightly. And when the US, under the Biden administration, went in and took away around $300 billion worth of Russian sovereign assets, this was a big wake-up call to everyone, not just China, but the BRICS as a whole. So right now, China has very important questions that has to be answered, right? Yes, they're making a lot of money. Their trade surplus is around $1 trillion a year. And where are they going to put their money into? And that's why over the last, I think since December 2024, China has been aggressively increasing their gold stockpiles because it's a neutral asset, and we can see China going out there in the world buying up a lot of physical resource mineral mines, because that is hard assets that at the end of the day can't be debased by US fiscal spending, the out of control spending by Washington. And in another sense, we have to understand that every dollar that China doesn't recycle back into US assets is money denied to the treasury market, denied to US equities, that actually adds more pressure on this entire system. And the US economy is a very hyper financialized network of gears, so to speak. So as we can see over the past 6 months, when the tariff war just started, it caused a lot of chaos to happen. Bond yields started to skyrocket, and that itself caused Trump to push the panic button and enact a 90-day pause, if I'm not wrong. So China, I'm not saying that China is out there dumping treasuries to crash the US economy, but the weakness of the US economy is a byproduct of its inherent weakness. China knows this, a lot of countries knows this, and by getting out of treasury bonds, well, it's no love lost for them if the US economy starts to tank as a consequence of that.
Yeah, and it sounds like Professor Wolff was trying to saying is that a lot of these policies that are supposedly economic in nature, for example, the trade war, has backfired dramatically. What's your assessment?
Well, I think that in the long run, this is an unmitigated disaster. I'll say a few words about it in a moment. In the short run, and I think that's what's going on, in the short run, he's desperate for political points, and you're getting behavior that goes with that. He's looking for whatever agreement he can get, whether it's with Japan or the Philippines or Vietnam or whatever it is, that can make it look like he's getting what he was out there for, can stoke up his image as a powerful leader who can bully the rest of the world to go on. But let's take a look at what underlies the bullying, because that's the longer run. And the longer run is, I think the way to look at this is as follows. The United States has serious economic difficulties, and it is an empire in decline. And those two things end up meaning that this empire, to slow its own decline, is willing to sacrifice the relationships it had with many, many other countries. And it is willing to do that in a stark and kind of unforgiving way that is teaching all of those countries, friendly, neutral, hostile, teaching them a lesson they have to acknowledge. And the same is true for other corporations, companies, capitalists in all these different countries. You can't do business with the United States the way you once thought you could. The tariff shows you that. The insistence on a tariff shows you that. The threat, which has been articulated by Mr. Trump repeatedly, that if you're a country that retaliates to the tariff imposed or the tariff increase imposed by the United States, well, then we will hit you again by raising the tariff in a kind of escalating procedure. We are going to hurt you economically if we can. Yes, it's American companies importing all this stuff that have to pay the tax. But we all know, if we do a little bit of economics, that those companies that face a rising cost because they have to give Uncle Sam a tariff for everything they bring in, they will do everything in their power to reduce, shift, get rid of this extra cost, just like they would with every other cost that they encounter and that they've always done. So here's the things they will do. They will push it forward, charge the final consumer a higher price. That's one way to relieve the burden on you. And the other one is to go back to the source country from whom you buy and try to get them to give you a lower price so that they absorb the tariff. But Mr. Trump's problem is either way, however each company does it, he will lose. He will get hostility from the rest of the world, and he will get a loss of support from his own consumer public base. He's caught. This is not a solution except in the posture of what he's doing, because if you've noticed, he likes to talk about tariffs as if the victim of them was unilaterally, obviously, and totally the country of origin, which is not only bad economics, but is in the short run, even in the short run, a very short-term advantage until people pay the higher prices, or the hostility of other countries shows up in the fact that they cut the United States out of their growth plans. And I know that that is happening from companies I'm associated with. That's already underway in many other parts of the world. And here's a footnote. The graph you showed us at the beginning, it's really unspeakable. The worst economy in Europe right now, by many measures, is the United Kingdom. For them to be accumulating dollar holdings when they are in desperate need of using those dollars to develop their own economy out of the hole into which it has sunk is a screaming comment on the Starmer government and on the conservatives that went before. What a disaster that place has become.
Yeah. And Sean, could you talk about now some of the nuts and bolts, for example, of Trump's latest trade deal with Japan, for example, because Japan is a very key cog in the U.S.'s overall strategy, which includes both economic and military war plans. And it appears Japan has just signed on to something that, as Donald Trump said in the beginning of my monologue, is big points that he's willing to give up for opening up to the United States. What exactly is happening there? How does it relate to the fact that China itself appears to be the target?
Sure. Now, if we look at the Japanese deal, right, it's a tragedy, it's a travesty. So the original plan Trump was going to impose on Japan was a 25% tariff. Now, if we look into the details of the deal, we can see that it's absolutely horrendous. Even though the tariff has dropped from 25% down to 15%, if we look and pick apart the entire deal, we can see that Japan is actually paying much more than they anticipated. Now, people in Washington, in Capitol Hill, Scott Bessent, they're all elated about the deal because Japan, in my humble opinion, is really on the back end of this. So what do we have? Tokyo has to buy an additional 100 Boeing planes. Well, why? To help Trump's favorite company stay afloat. Now, in addition to that, which is quite hilarious, they have to buy more American rice and spend like $10 billion more in US food imports. The defense contracts with the American military industrial complex will increase by at least $3 billion. And there's another aspect of the Japanese deal which is actually very outstanding for the US and astounding for me just to realize. Japan is going to set up a kind of fund to invest $500 billion into the US economy. So we can see that Trump, the US administration, they're doing their very best to squeeze their allies of their capital, of their money, so that the US can essentially escape scot-free from their problems. Now, as what Richard Wolff said, right, it's true that it's going to backfire down the road. What you're doing is that you're squeezing your allies, you're squeezing countries around the world, you're using economic policy to influence statecraft. And this is going to build up a lot of hatred, a lot of resentment around the world, and it's going to backfire. Just look at the situation in Europe. You know, a lot of people over there, they're reducing their purchase of Tesla cars. There's a soft boycott going on of US products. And when we shift our attention to Asia, sooner or later, we'll be able to see countries from Japan, even South Korea, they'll be moving more of their business, more of their partnerships to the BRICS, because BRICS, well, they're going to be a growing bloc over the next 5 to 10 years, 20 years, even beyond that. And just think about it in a very simple way. So Japan, they will need to sell to the US at a 15% tariff, right? We all know that the majority of the tariff will be absorbed by the American people. Companies will pass down the additional cost to consumers. But there's going to be quite a few companies in Japan who will have to eat some of the tariffs as well, right? I mean, a 15% tariff is very punitive when you consider big Japanese car brands like Toyota, Nissan, Honda, their margins are like 10 to 15% at best. So their profits are going to come down. And the only way for Japan, maybe South Korea, once they sign the deal, which I reckon is going to be quite horrible as well, is to bring down their cost of production. And the only other outlet they can go to is China. And it's quite fascinating when we see, the trade flows of China, their exports to the US is going down, but on aggregate, everything is going up. And why is that the case? That's because other countries in the world, whether they like China or not, whether it's the Europeans, whether it's the Middle East, whether it's some American companies themselves, they need to trade with China to bring down their manufacturing costs. Because if they don't, their profits are going to collapse, layoffs are going to happen, American consumers, they'll be facing higher prices, and that really delivers a cascading effect to the US economy. So Trump's tariff war is punitive not just to the world, not just the US allies, it's helping China, in fact, but it's more or less destroying the US economy in real time.
Yeah. And
Danny,
yeah,
can I add just another point to what Sean has said?
Yeah.
Every government in the world, I don't think there's a single exception, where they have, which almost every government does, domestic economic difficulties of one kind or another, with their exports, with their imports, with their financial situation, with their unemployment. Every leader will now be able to say to his or her own people, yes, we are having difficulty, blame the Americans. Because what the Americans are doing is making things more difficult for everybody. And so there's enough plausibility, it'll be an exaggeration, but it'll be an exaggeration based on something that is real, that is in the newspapers all the time, that they know about, hear about. And what you're therefore doing is, it's not that you're not doing so-called soft power, the way they used to call this. You are undoing half a century of soft power. You are transforming the United States from the interesting place where you can buy, jeans or clothing or movies or all the elements of ideological transformation are now being put in reverse. The United States is becoming a villain. The stories of treating the immigrants the way they are, or for that matter, people who aren't immigrants have to worry when they arrive at an American airport, what will happen to them. All of this is a process in which you are undoing the position of the United States. And that's going to hurt American exports in a major way. It's going to have all kinds of consequences. Scientists leaving one part of the world and moving their careers to another. I could go on. We're seeing it already starting. And this is this is so stark that it makes me wonder that the level of anxiety about the conditions here in the United States among the people at the top may be much more advanced than we know, because they work very hard not to have us see what the problem is. And so even we are taken in with our critical approach not to see just how bad this situation. Otherwise, why would they do this?
Yeah, and the word that comes to mind is trust, just at all levels. The United States, economically, foreign policy. Donald Trump almost uses bullyism as both the carrot and the stick, and that has led to just a plummeting of trust worldwide, let alone domestically, where those fears that you speak of, Richard, are very real, not just at the top, but of course, ordinary people who see this instability as, a pathway toward an uncertain future. Now, Sean, I wanted to talk about the very bad news for the US dollar of late. And we may remember that Donald Trump, in the lead up to and directly following the BRICS summit that happened in Rio earlier in July, this is the kind of rhetoric that he's been talking about when referencing the dollar.
And if we lost the world standard dollar, that would be like losing a war, a major world war. We would not be the same country any longer.
So he has been saying this over and over and over again, Sean, and yet the very policies that his administration are pursuing have been backfiring on the dollar quite dramatically. Reuters recently reported that dollar losses have held against the Japanese yen and other currencies, even amid this trade deal with Japan. And then this underscores a report from the New York Times talking about the longer term picture here, that the dollar has had its worst start in 2025 since 1973. And in this, it gets right to the point. The United States' currency has weakened more than 10% over the last 6 months when compared to a basket of currencies compared to major trading partners. So, Sean, what exactly is happening to the US dollar? Because, there's been a lot of talk of de-dollarization, of course, among BRICS countries, but there's obviously huge internal problems that move beyond even the external shifts we're seeing worldwide.
Right. I think we need to understand that Trump is trying to square a circle. He's trying to accomplish the impossible. Now, there's a lot of talk about Trump trying to defend the world reserve currency, and he's absolutely right when he says that losing the dollar as the reserve currency in the world will be losing a major war. I mean, it will be even worse than all the wars combined lost, because what underpins the entire US economy is the strength and, might I add, the stability of the dollar. So the entire US economy is predicated on the world loaning the US a lot of money to develop their industries, or what's left of their industries, develop Wall Street, fund the military industrial complex, and to build up the US as a whole, to fund all the liabilities, Social Security, Medicaid, Medicare, you name it. But if the world suddenly wakes up and decides, hey, we are not going to fund the US anymore, it drives the entire US economy to the tailspin. Now, what do I mean by Trump trying to square a circle? Well, basically, he wants to drive the US dollar lower. He has said it quite a few times in order to make US exports more competitive. And on paper, that absolutely works. It sounds nice. But in reality, it's a fantasy. Well, firstly, because if you drive the dollar so low on paper, you'll be able to export more US goods to the world. But the big problem is that Trump is basically tariffing all the imports that's needed to drive US manufacturing growth. It's insane. It's crazy. Now, we just need to look at steel, aluminum, copper. Now, these are three of the most undisputed base metals that is needed to build anything from cars, semiconductors, construction, furniture. No, not furniture. I mean, more of the electronics, these kind of products. And when you increase your cost of production by 20, 30%, suddenly prices will all go up. And let's not even talk about the US domestic market for a moment. Now, if suddenly all your prices goes up by 20 to 30%, plus you have a dollar falling by 8 to 10%, what's going to happen? Suddenly your input costs go up by 40 or even 50%. Now, do you think that makes it even feasible, even possible for the US to become an export-based economy? Chances are it will not be, because who in the world will want to buy something from the US just because it has a Made in America label when it costs 40 to 50% more? Most of the stuff that's made in the US can be sourced elsewhere, especially in China, when they have very robust supply chain, a very good manufacturing ecosystem. They can bring their cost of production down. So as the dollar continues to go down, this actually makes it less likely for the US to export more to the world, primarily because the US did not solve the supply chain problem from the onset. Now, before they started on this economic war, this trade war, perhaps the smarter thing to do would be to spend, a year, a decade to go around the world and start building up mines, feed all the supply to the US, and then you embark on this war. But they put the cart before the horse. They had the whole situation wrapped around the wrong way. So right now we are seeing the consequence of that. And I think it's going to be very impossible for them to maintain the dollar's reserve status in the long run, the longer this tariff war continues.
Professor Wolff.
It's even worse, because had he done it, had he raised the tariffs either uniformly, or if he wanted to vary them differently and then stuck with it, it would be one thing. But to do what he did and then to bounce around, to delay them, to make them temporary, to change them up or down, with Canada, with Mexico, on and on, the creation of a layer of enormous uncertainty. And let me explain why that's so crucial. Business person after business person that I've spoken to says to me, and it's, by the way, well known in the literature, that uncertainty is the biggest enemy of an investment program. The problem is not it's profitable. The problem is really, what's the probability that it will be profitable? And you can't normally calculate that very well, but when you have oscillating policy, it makes it only worse. So let me say in simple English, if you're a businessman or woman and you're contemplating moving production, say from Shanghai to Cincinnati, you know it's going to take time, it's going to take a lot of money, it's going to disrupt everything that you do and relationships that you have. If the profit difference of staying versus moving is large, and the probability that that will endure is large and won't change a lot, if that probability is also large, then you might do it. But they aren't large enough. Otherwise, see, if you're the vice president who makes the decision, and then you arrive in the United States to set up your company, to move your business from Shanghai to Cincinnati, you don't know how long Mr. Trump will keep the tariffs in. Will he raise them? Will he lower them? Will that happen under him? Will it happen under his successor? Moving a factory or anything like that is a multi-year operation at enormous cost. They're not going to make those decisions, those costly decisions, when Mr. Trump has not only shown them, as Sean has just listed, all the reasons why not to do it, but he's also added the layer of uncertainty, which makes it even more unlikely that you're going to see meaningful movement. You may see promises that we will invest $500 billion in the next decade, but that can work out and that cannot work out. And everybody who's involved in this knows that story only too well.
Yeah, let me add one point to the tariff madness, right? To add on to Richard Wolff's statements, I think it's very important to understand that the tariffs is actually much more impactful than the Russian confiscation, the confiscation of Russian assets. Because if you're a G7 ally or if you're a neutral country, you can always close your eyes and say, that's just Russia, that's just Iran, enemies of the state, enemies of Washington. But the tariffs is affecting every single country out there, even Penguin Island. And this is the big problem with the tariffs. And when we look at the formula that was revealed by Lutnick or Trump, it's absolutely ridiculous. Now it's supposed to be reciprocal tariffs, right? So by right, you need to go through the list of each itemized product countries are tariffing you on. But when we found the formula, it was just a ridiculous formula that was slapped onto the trade deficit. And countries that the US actually enjoys the trade surplus with is getting clobbered with a 10% baseline. So a lot of trust has been lost in this grand tariff exercise.
Yeah, and perhaps both of you briefly could talk about, if you could, and Sean, you can begin, the economic foundations here. In a recent video, you talked about the differences between the US and China, for example, almost at the economic base, how they are approaching economic development at this time, because oftentimes this is not what's people like Scott Bessent, they're not talking about, and the consequences, the difference between the consequences of the policies and the stated intent are so wide, for example, when it comes to tariffs. So what exactly are the foundations right now of the US's almost like economic trajectory as it maneuvers through what you just said, these geopolitical contradictions?
Sure. Now, it's quite funny to think back to the 1960s, the 1970s, where the US actually were doing things right. We can all remember the great projects of the Hoover Dam. The US were also building a lot of power plants. They were building a lot of roads to improve their infrastructure. But now we are not really seeing it. We are seeing a lot of Wall Street shenanigans, a lot of tariff wars, trying to use paper products, printing money to people over the entire system. It's a short-term fix. And I guess a part of it is due to the, how the entire Washington machine is being structured. Every 4 years, you have an election. And, it's always goes from red to blue, blue to red. However, if we look at what China is doing now, they're actually doing what the Americans have been adopting during the golden ages of the 60s and the 70s. Now, a great example is the $170 billion dam in Tibet, hydroelectric dam that's gonna, it's gonna generate more power than the entire country of Poland. One dam, more power than the entire of Poland, and that's gonna increase China's, the competitiveness when it comes to industries, when it comes to manufacturing. It's gonna position China in a very good spot to be very competitive against the US when it comes to future industries, right? For example, let's just talk a bit about the chip war and semiconductors. Now, we all know that the future, at least when it comes to productivity, is going to be revolving around AI and chips. Now, when you want to go against the US that has a very, maybe 3 to 5 years lead time when it comes to all this technology, AI, chips, semiconductors, you need a lot of energy to catch up. You need to bring your cost of production coming to go down. So we can see what China is doing right now is embarking a lot of public works, not just to benefit one particular company like Boeing, like what Trump is trying to do. Their public works is trying to benefit the economy as a whole. So for example, when this dam comes up, it will lower the cost of China's energy production, cost of electricity, cost of power, so that various industries from EVs all the way to semiconductors, they'll be able to be more competitive to fight against the US. So what the US is doing is trying to paper over their problems, making the economy even more financialized, while China, they are adopting what they've been doing over the last 10 to 20 years to basically excel in the real physical world.
Yeah, Professor Wolff, any reaction to this?
Yeah, I want to take another example, and that is electric vehicles. It is now pretty well known, although not here in the United States, that the best and the cheapest electric car and truck on the market, at least now, is the BYD car and truck coming from China. And it had a tariff. I think Mr. Trump put it on around 27%, and then Mr. Biden raised it to 100%. And so currently, if you want to get a BYD electric vehicle, you have to pay, for example, $30,000 that goes to China to pay for the vehicle, and then another $30,000, 100% tariff tax goes to Uncle Sam. So that if you want to buy it here, it would cost you $60,000, and that you're not going to do that in most cases. You're going to settle for an inferior car, electric car or truck. You're going to pay $45,000 to $50,000 to $55,000 to General Motors or Tesla or Ford or someone, Toyota, and you're going to end up with having spent more than the $30,000 it costs to get the vehicle and getting a poorer quality vehicle. Now, keep this in mind as I explain what you know, which is every American company that competes in the world economy and buys as an input either electric vehicle cars or electric trucks, every one of those competitors around the world is going to have an advantage over the American because of the tariff. The Americans cannot access $30,000 BYD trucks. The tariff precludes them. They have to pay $60,000 or do without the truck. And that means their competitor, whether that competitor is in China or Europe or Asia or Africa, is going to be able to outcompete the American. And the more goods are tariffed and that fall into that situation, the more you're going to lose jobs here. When he says, I'm going to protect the workers here by not letting BYD in, that's correct. He's going to protect some workers, but he's going to be doing it at the price of the jobs of other workers in the competitive story I've just told. This is not rocket science, and it means that the danger here is not only that he won't succeed, but he'll do damage that will take a long time to correct.
Yeah. And now perhaps we can. I wanted to pull this up actually. I want and talk about how the rise of China and BRICS is factoring into all of these desperate, it appears, economic moves by the Trump administration and the U.S. as a whole. So in a German journal, the International Political Studies Journal, wrote a reaction to the BRICS summit, which has not been covered very much by Western mainstream media. Harder, better, faster, stronger. The BRICS summit shows the group is more economically significant and politically present than ever before. And I just want to scroll down to a particular a quote here. One issue on which all BRICS members and partner countries are largely in agreement is the development of new payment methods to reduce dependence on the US dollar. In practice, India already pays for Russian oil and alternative currencies such as the rupee, yuan, and the Arab dirham. 2 years ago, Brazil and China announced the establishment of a clearing arrangement to facilitate bilateral trade and lending in yuan. And Russia and Ethiopia are considering trading in their national currencies. The strategy for BRICS over the next 4 years, the new development bank, the BRICS Bank, aims to provide around 30% of its financing in local currencies. Sean, to Professor Wolff's point as well, and you brought up the dam that is going to be built in Tibet. There's this. The Wall Street Journal reports China has curbed its oil addiction and blunted a U.S. pressure point. So it's not just the dollar. It's also something like oil trade. The government has boosted domestic production in the EV industry in the name of national security. 14 million charging stations. Sean, talk about how the rise of China in BRICS kind of is at the center of this kind of desperate bid by the Trump administration via tariffs and trade war.
Sure. I think as you pointed out in the first article, right, de-dollarization is something that's not going to stop. It's only going to get worse, especially when the tariff war continues and other countries around the world get threatened, especially when China continues to grow and BRICS as a whole continues to rise. Now, I think a lot of the damage started in 2022, 2023, when the West decided to sanction Russia. Now, that forced Russia to really join hands with China. And now we have a very complementary system where China actually gets cheap commodities, very affordable commodities, everything from metals to oil and gas, LNG, and it feeds back all the way to the Chinese economy. And in some cases, they're enjoying discounts of like 20 to 30% in certain instances. So this allows China's entire ecosystem to pump out very cheap, affordable goods. And these goods gets flooded to the rest of the world. And because of Trump's tariff war, every country right now, they're scrambling to lower the cost of production, or in most cases, they just want to survive. They want to allow their citizens to enjoy a lower rate of inflation. And like what Dr. Wolff just said, countries, they need all this very, very cheap machinery, all these cheap cars in China to really run their economies, run their livelihoods, and just to make life more livable. Now, as this trade continues to go on, as the article pointed out, China is not going to fancy using the US dollar as a medium of trade. They're going to push for their own local currency settlement. And it doesn't really matter what kind of currency is being used as long as it's not the dollar, right? It could be the rupee, it could be the ruble, of course, it could be the Chinese RMB, but all of this are still considered de-dollarization. And as a consequence, when China gets all these big trade surplus, we can see them going around the BRICS, investing into aluminum, nickel mines in Indonesia, spreading the wealth amongst the rest of their members. When China develops, a lot of solar panels, and in the future, when it comes to chips, they're going to flood the entire BRICS bloc with all these cheap commodities, just cheap technologies as well. So as BRICS continues to grow, and I believe right now they're going to be 30 to 40% of global GDP very soon, in maybe just 3 to 5 years. A lot of these transactions, when it comes to currencies, will naturally just bypass the US dollar. And this creates a very dangerous feedback loop where a lot of the surplus, a lot of this savings from all these countries, because the US, their trading status will continue to drop lower and lower every single year, especially when it comes to them exporting stuff and even importing stuff as well. More money will leave US assets, whether that be stocks, whether that be bonds, and it will flood into other stores of value. And I don't think that's going to be great for Trump.
Yeah, Professor Wolff, your reaction to this, the rise of BRICS, China, and how it impacts this decline that we're seeing, and the policies that we've been talking about, the tariffs, the trade war, et cetera.
Well, I group all of these as symptoms of a declining empire. I think, and I become more convinced of this almost with every day's headlines, every day's breakthroughs in revealing what's going on. This is the end. You've had a century of the Pax Americana, the globalization, the transformation in a very Hegelian dialectical way of the little colony of Britain, fights a war, becomes independent, and eventually transforms the colonizer into the colonized, and vice versa. The US and Britain exchange positions or change roles. And the British Empire is at the end of its long decline. The United States is a much earlier stage, but it's a stage of that decline. When the different parts of the decline provoke reactions that are intended to slow the decline, but are overwhelmed by the whole process, and so they worsen what they're supposed to alleviate. And I think we're seeing that. That's why I picked the example of the electric vehicle, because here's a tariff designed to protect American jobs. It doesn't do that. It has perversely the opposite effect. Keeps us wedded to fossil fuels. That's not where the world is going. Keeps us low. But I was in Paris a few weeks ago. The taxi cabs are BYD. What's going on? The Europeans are having debates about how to win investment from China. All right, so you can see they're trying to solve their problems by enhancing the economic well-being of the Chinese, who will, of course, use that then in developing themselves. They are the rising new phenomena. I don't think it's clear yet whether they're going to create a comparable empire to the British and the American, or whether they're going to actually try to develop a multilateral system. That was the dream of the League of Nations after the horrors of World War I. And it was again the dream of the United Nations after the horrors of World War II. Maybe the Chinese are going to be the agent that gets beyond sequential empire to a multinational way of coping with the problems of a modern world. The technology to coordinate is there. The political will to do so isn't there yet. And the role of the Chinese is probably going to be to decide how to go and therefore take the world with it.
Yeah, and Sean, we have a lot of what Professor Wolff said, the U.S. being a declining empire. It's born about too in the fact that despite all the attempts of the United States to weaponize the dollar, to isolate, as you called them, enemies of the state, the enemies that it has prescribed and targeted, China being the biggest, it seems to have an effect that is quite contrary to the intended one. China in the first half of 2025, reports are, has grown 5.3%, which is quite resilient in world economic outlook terms, as we've seen them over the past several years. And we also have the United States contracted in the first quarter of 2025 and is unlikely to bounce back to a level comparable to China. So talk about what exactly is happening here. Trump is touting that these tariffs and all the ways that he and his administration best sent are bullying the world are supposed to bring growth and are supposed to bring opportunities. And it's all about America coming back to a reality you spoke to prior about with infrastructure development and being number one again. It doesn't seem like it's working out that way. Why?
Well, I think it all comes down that Trump is trying to accelerate a 20 to 30 year timeline within the next 4 years. Hopefully he can get someone else to take over his mission and stretch it out to the 8 years. But when you have such a gigantic project of restarting the entire American economic machine, and you want to cram everything into a certain period of time, you got to break a lot of eggs. And the way Trump is going about it is really pissing off the entire world. They are setting up China to enter another golden era, and they are impoverishing all their G7 allies all the way from Europe to Japan. But as we talked throughout the last 1 hour, right, the problem with this is that it raises the cost of production in the US, it raises prices, and do we really trust the inflation statistics coming out from the BLS, or are we going to, trust our lying eyes, as they say? Prices have been going up 5 to 10% over the last year when it comes to, products on shelves. I mean, if you just have friends who tell me that prices are still going up in Walmart. And what does this do? It's basically demand destruction. People just don't have enough money to spend. And Trump likes to say that, if everything shifts back to US production, definitely the US consumer will buy local. But he forgot that they have another third option. They might not buy exports, that's true. But that also means they just don't buy anything at all. And that's why we are seeing a contraction in the US economy of, I think, 0.5% when it comes to Q1, and China growing by 5.3%. And another big consequence of this is how the US is not spending their money wisely. Now, just imagine you're injecting a deficit of almost, 2% a year, 1.8%, 2% a year, and your result is a 0.3% or 0.5% negative contraction. That's not really good at all. It shows that you're not even generating economic growth despite the amount of fiscal spending, deficit spending that you're generating. However, for China, their deficit is around 1.5%, maybe 2% at maximum. I think it's lower than that, but they're driving 5% of economic growth. And the big driver of that is Trump's tariff war. So I think everything has just backfired. And realistically, if the US wants to get back on track, they will need to really take a humble stance and maybe cede the next 5 to 10 years, or maybe even longer, to China, lick its wounds, and go back to the drawing board and really ask themselves what really made the US great at one point in time, and then work from there instead of trying to, punish the whole world and continue this power trip.
Yeah. And Professor Wolff, this humbleness that Sean says the U.S. needs, and I agree, it does need to be more humble in many ways. It's often obfuscated by a level of maybe just completely misguided confidence. But not everyone has confidence in the state of the United States' economy, its global standing. Wells Fargo has sounded the alarms about the growth numbers of the United States, and saying that there could be a scary recession coming, given that contraction that Sean mentioned in Q1 is reminiscent of the kinds of growth levels we see either during or just after a recession. So talk about what might be obfuscated here by both Trump's policies and what the declining empire as BRICS in China rises and leaves the empire behind. What is being obfuscated here and hidden that maybe some in the financier class are aware of?
It'll be hard for the financiers because that's what they are. They live in the world of moving money around, and long ago lost interest in, knowledge of, and any incentive to keep much track of the underlying production. Here is, in a way to put it. When Britain becomes the engine of the world economy, and the beginnings and the power behind Britain taking over the world in the empire, it is a country that is pouring investment into the production of textiles, the production of iron and steel implements, the production of shipping that uses iron and steel, and so on. It is heavily devoted to doing the latest, best, heaviest production possible in the world of goods. The United States, both before World War I and particularly after that, or after the Depression, is likewise pouring money into production. The railroads, the infrastructure, the steel mills, the ironworks, all of it. And then, this is so crucial, and it's crucial economically and ideologically. Starting around the 1970s, American industrial capitalists had an epiphany. two things overwhelmed them. Number one, the internet and all that it represents. And number two, jet engine travel. Suddenly, you could keep tabs, you could supervise a factory in China as easily as you could 50 miles away in a neighboring US state. And likewise, in a few hours, you could be there if you had to be on the ground to solve a problem. It suddenly meant, and this is the way they saw it, and I'm not saying they had to see it this way, but this is the way they saw it. We can make much more money, more profit, if we move production over there to where the wages are a small fraction of what they have become here in the United States or in Western Europe because of generations of class struggle in which the working class pushed up their wages against the fierce opposition of the capitalists, but an opposition that they eventually overcame, at least to a considerable extent. And no sooner did the early capitalists who were willing to take the risk close the factory in Chicago, open it in Tianjin, and solve all of the problems of such a move, and there are many, it became clear that even when you add the cost of shipping all that stuff back to the United States, it was still profitable, which meant that all the competitors who are American, of the American companies that go first, have to do it too. And you suddenly have, over the last 75 years, but particularly the last 50, 70 to now, you have a mass profit-driven exodus of American industry over to China. I mean, to India, to Brazil, but mainly to China. And the problem ideologically is no one had a gun to their heads. They did that voluntarily to pursue profits, to generate a tremendous boom in the American stock market since the 1980s that reflected all of that. And in order to be critical, you have to say who the culprit was. It wasn't the government. It wasn't the labor unions. It was corporations who were already profitable, who were beginning to suffer the competition of the returned German and Japanese capitalists, but who nonetheless made a decision to deindustrialize the United States, the way that Europeans are doing it now, because they can't afford the high prices of education that their own sanctions against Russia brought on themselves. So don't be surprised if a system makes decisions that bring onto itself an evolution about which they later become very unhappy. That's what you have now. That's why it's important to blame China, as if they are the ones who made all this happen, as if they are the ones aggressively pushing their way into the world economy and squeezing the American dominance. It is a sad sequential history, and the United States is itself the problem and the flaw in all of this. And unless and until they can figure out a way to change that, which protection does not do because of the examples Sean and I have given, well, then they're stuck. And they're just stuck in a decline, which they seem totally unable to admit, let alone reverse.
Yeah, both of you bring us home first with you, Sean. What do you see as kind of the long-term outlook, given the developments we discussed from BRICS' rise, China's increasingly, if not completely dominant role in the global economy and geopolitically as well? Where do you see this long-term heading, given all that you've been analyzing?
Sure. I think going forward, I guess in the next 10 to 15 years, we are going to see the rise of BRICS become more and more undeniable. Major trends like de-dollarization is going to continue, and that's going to impact the US economy, the financial system in a very bad way. And let me just add on to what Dr. Wolff said about the financier class. And it really shows a very big disconnect on how US policy is actually benefiting the people on the top and not really the entire economy as a whole, compared to China, where they do a lot of public work, so the entire economy as a whole can survive and thrive. Now, if we look at the recent tax bill from Trump, the $3.4 trillion spending that's going to happen over the next 10 years. Now, if we dig into the ugly details of the tax bill, who really enjoys the majority of the earnings and their income actually goes up? Now, if we look at the top 10 to 20%, these are the people who are actually earning six figures, additional earnings over the next 10 years. And the people who are on the top 0.1%, these are the people who's going to make bank, and not to mention people who are big business owners, the investor class, when it comes to the big corporations as well. Now, the big problem with this tariff war, when it feeds into the tax bill, is that that business owners, companies, corporations, they know that the outlook for the US consumers will be rather bleak, especially when prices are going up. So Trump's tax bill is basically leeching off the tariff coming down from the private sector, going back to the public sector spending, and the money then gets redistributed to the wealthy, to the people with the money. And people with money, they look at the outlook of the US economy. It's not looking good as well. So what are they going to do? Are they going to use the money and start building new factories voluntarily? Are they going to start opening new businesses? No, chances are they're going to buy up existing assets in the US economy. That's why right now stock prices are still going up, especially after the Trump tax bill. So this just feeds into a greater wealth divide in the US economy. The rich, as a consequence of this tariff war and Trump's tax bill, they're going to get richer, while the poor, the middle class, they're going to get hollowed out. And even if we put BRICS aside, we put China aside, this really has very bad omens for the US economy. It's very ominous for people living in the US going forward. So I think that this tariff war has really backfired, and the biggest losers, the biggest consequences is boomeranging back to the US.
Professor Wolff, any final thoughts as we close out here?
Yes, I was born in the United States. I've lived and worked here all my life. And so my lifetime happens to coincide with the Cold War after World War II, whose legacy is still with us. And here's what I would say. I think we are headed like a runaway train going down a very fast track, heading straight for a stone wall. I do expect there will be a crash. Of course, I can't tell you exactly how or exactly when. No one can. But all the conditions, whether it's an overvalued stock market or it's all the comments and analyses that Sean and I have tried to summarize here, that's what I see coming. And that makes me wonder whether or not we may be in for a kind of rerun of the last time American capitalism crashed in the 1920s and the end of 1920s and the 1930s. At that time, the American people went sharply, the working class, to the left. It supported a communist party, two socialist parties, and the greatest labor union organizing drive in American history, the greatest one before or since that time. And I would not be surprised at all if the reaction of the American working class is, we have been neoliberal supporters and it didn't work for us. And then we tried the right wing, Mr. Trump and the MAGA, and it didn't work for us. We will now try the left. And whether it's Bernie Sanders or Alexandria Ocasio-Cortez, or now Mr. Mamdani here in New York City, or Mr. Fateh in Minneapolis, interest in socialism, which is less about socialism and more an alienation from the capitalist system growing quickly in the United States, may give us a hint as to where this is all going.
Yeah, and also in that time period, during and following the Great Depression, we also saw a world war. So that, and it seems like the conditions, even though they're far different now than they were then, they're still, as we've covered here on this channel, as we've spoken about so much, Professor Wolff, there is a different kind of world war brewing.
Yeah.
Now, gentlemen, this was a great show. I want to make sure that everybody knows where to follow you, so you can both give that. I know I have Sean's YouTube channel, Sean Foo, in the video description, as well as yours at Democracy at Work, Professor Wolff, and the Democracy at Work organization. But please, Sean and Richard, tell us where we can find you.
Sure, you can find me on my YouTube channel. I mean, it's quite easy to find. Just search me up on Sean Foo or youtube.com/Sean Foo Gold. We cover everything from economics, macroeconomics, gold, the craziness of this geopolitics, and try my best to give a good show to you guys every day.
Yeah, no, it's a great channel. Everyone should definitely subscribe. Professor Wolff, how about you?
Same thing. You can find everything we do or ways to get at it at our website, democracyatwork.info. We're also all over YouTube, and we are now busily building up our Substack. All of that under Democracy at Work. So I would invite you to take a look there and find the works we do. We are a team. We now produce videos. We publish books. We give talks. We do quite a bit of things. We're about to branch out into offering classes. And all of that driven by a growing audience, which I had never expected to see, but which is as gratifying as I know it is for Sean and for Danny as well.
Yeah, there's a huge thirst for better economic analysis and better analysis of the world that we just don't see in the mainstream captured corporate media. So with all of that said, gentlemen, this was a great stream. We'll have to do this again at some point soon. As you like to say, Sean, at the end of your videos, we navigate this crazy time. Everyone hit the like button as you go. Go to the video description to find both Sean and Professor Wolff's links there, as well as all the places you can support this channel, Patreon, Substack, and so much more. I want to just quickly thank all of the super chats. Thanks so much for your support, and of course to the moderators in the chat as well. And thanks to everyone viewing. Until next time, everybody, I will see you again soon. Bye-bye.
Bye-bye.